Hey guys, thank you so much for grabbing this video today. We're going to cover a ton of stuff that's going to help you tremendously in making your decision about your mortgage financing. Even if you've done multiple mortgage loans, you're going to want to stick around and watch some of this valuable analysis that I'm going to get to a little later on in the video that's going to show you how to save thousands or maybe even tens of thousands of dollars on your mortgage financing over the life of time in which you have mortgages. I know that sounds a little optimistic, maybe even a bit unrealistic, but I think after you go through the analysis, you're going to see how totally valuable it's going to be to have this information in your pocket. Before I get to that, let's cover some of the commonly asked questions that I referred to in the previous video. One of those is, do I use a bank or a broker? Now, I don't think it's just two categories. I think there's banks, brokers, there are online lenders, and there's what I like to refer to as middle tier mortgage companies. That's what my company is. We exclusively deal with mortgage lending. We don't do any other bank products, so we're totally focused on that type of solution. Banks, let's start there. Excuse me. Banks are very visible. They're on every street corner in every city, right? So you see them constantly. You go in there once or twice a month. So it seems logical that walking into a bank and solving your problem there would be an easy solution. Now, the drawback with banks is that they just do not employ experienced people. The reason for that is they just don't compensate people well enough. Once people develop some experience at a bank, they usually move on to some of these middle tier mortgage companies or other companies that compensate them better. And that's why a bank is probably, despite its visibility, is probably going to be a drawback. You need an experienced project manager to handle your transaction. Despite what a lot of people think, most consumers think that the mortgage product is a commodity-based product. Even a lot of lenders consider themselves to be a commodity, and that's why they focus so much on interest rate, because they just think, oh, it's just about the lowest rate. But I think if you've gone through a mortgage transaction or two, you'll realize how much value a good lender can bring to your equation, and potentially how much bad value a bad lender can bring to your equation too. You don't want to suffer through that. You don't want to find out the hard way. So take an interest in noting how much experience someone has. I've been in the mortgage business for just under 30 years. I'm going to show you some of my Google reviews right now and some other customer reviews that people have been so kind as to write up for me. I think that these are not only a testament to how committed I am to making sure you have a good experience and that you get the thing that you came to me to get, but also that I'm comfortable with telling people what they need to hear versus what they want to hear, right? A lot of mortgage lenders are so concerned about earning your business and earning their commission that they forget that their first job is to help you get your transaction done efficiently and effectively, and to make sure that you are able to borrow money by spending the least amount of dollars to do it. And I focus on that term dollars, importantly, as a distinguishing factor from just focusing on interest rate. And that's something that will lead us into this analysis later, because you pay dollars, you don't pay interest rate, okay? So let's focus on that part, and I'm planting that seed for later. So back to the other options for you that are available as online lenders, and online lenders are almost as visible these days as banks, because most people shop for stuff online, and the big online lenders are all over Google and all over other search engines. So you've got companies like Quicken, which is the same as Rocket Mortgage. You've got Lending Tree. You've got New American Funding, Amerisave. If you're here in Denver, there's American Financing, which advertises on the radio and on the internet a lot. And I'll tell you, the common thread with all of these companies is that they are mass production mortgage operations, right? Which means they're a conveyor belt mortgage process, which is good for them because it creates a real sense of efficiency for their company. You'll end up talking to 3, 4, maybe 5 different people throughout the processing of your loan, which, like I said, that's great for them because they can kind of categorize what people know, and they only need to train them on certain aspects of the loan. But for you, that's a major drawback. You have to end up dealing and maybe re-explaining your situation to that many different people. That not only is a pain for you to deal with, but it also can cause some real communication gaps and some failures in actually getting your loan done. As much as Rocket makes it seem like it's magic, I can assure you that's one of the most complained about companies when I'm talking to other real estate agents and other professionals around this business. So the thing about a mass production, I don't know about you, but I never want to buy anything that's mass produced unless I'm getting such a huge discount on that thing that just makes it totally justifiable. And I'll tell you, you do not get any discount by using those companies. In fact, most often you're paying more. You just don't realize it because they'll maybe give you the same rate or lower rate, but you're paying so much more in closing costs that's the overall price of a mortgage loan, is a combination of interest rate and closing costs. And so our analysis later will dive into that. I only deal with about 5 to 8 clients every single month so that I can stay focused on those clients from start to finish in their transaction. I'll be your only point of contact. And you may occasionally talk to my processor, but for the most part, I will be your main point of contact I'll have my hands on the whole thing from start to finish. So that's an important thing, a distinguishing factor that you'll want to consider. Now, the next most important question that comes up is obviously, how much do I qualify for? You got to know that, right? If you're going to go out and start shopping for houses, you got to know how much house you can afford. You need to know how much your monthly payments are going to be, and you need to know how much down payment you need to get that job done. That is something that I will usually be able to do within about an hour or two of our first phone conversation. I'll spend 15 or 20 minutes with you on the phone collecting enough information to then start working on your numbers for you. And then within an hour or two, I can get back to you and tell you how much you qualify for. And you can get out there and start shopping and doing your reconnaissance on the real estate market in that price range. It's not as easy as just that. So there's employment issues, there's credit issues, there's down payment issues. So let's start with credit issues. I've got some really good, one of my best resources for mortgage processing is getting your credit scores improved. We've got a Rescore Express program, which I'm showing you right here. Rescore Express is an analytical tool which will tell us how quickly and how highly we can move your credit scores up in a short period of time. Longer term credit repair is another proposition which we can work on as well. But the short term stuff, we can pop credit scores up 20 or 30 points a lot of times to get you into the rate categories that you need to help you qualify for more. So Rescore Express is a great tool to help you with that. Down payment issues, I'll coach you on whether we need to use down payment assistance programs. VA, FHA options are certainly available that have lower, and VA is the only zero down payment option that's out there anymore. But I'll coach you through gift scenarios and 401k options and other retirement account options that will certainly help you out with down payment options as well. So, and then there's employment issues, which, an experienced person will certainly be able to coach you through some self-employment stuff. If you've got self-employment tax return issues or, commissioned income or part-time income, all those things are things that I can coach you through and help you try to figure out, because those are difficulties that can sometimes present problems. But the earlier on that we know about these problems, the earlier we can have time to work on a solution. So I'll try to vet that stuff out right in the beginning while we're going through our pre-qualification. Now, if you're in the Denver real estate market, you know how competitive this real estate market is, and you got to give yourself a leg up in this real estate market. Short of being somebody who can just write a check for more and more money, if you're a billionaire, that's no problem. But for the rest of us regular people, we got to come up with a little bit more creative solution to give ourselves a leg up from the competition. There might be as much as 8 or 10 other people offering on a house that you might be looking at. You got to find a way to distinguish yourself from those people. The best way to do that is to get a full credit pre-approval. That's a little bit more extensive process. It'll take us about a week and a half to get you fully credit approved, we'll exchange some documents and go through a full credit approval process. Then you become effectively the same as a cash buyer. And that way, when you make an offer on a house at that stage, you can close in a week and a half or 2 weeks, so that you then, no cash buyer is going to close in less than a week and a half or 2 weeks, because they still want to do the same two things that you have left at that time. They want to get an inspection and they may want to get an appraisal. Those are the only two things that'll be left for you to get done after we get a full credit approval. Now, the third question that consumers don't really ask me, I wish they did, because I wish they were more conscious of this issue, is the analysis on what's more important, or at least as important as a low interest rate. And that's where I'm going to dive into this closing cost analysis. If you're watching on a phone right now, you might want to flip over to a computer if you want to see the numbers, because I'll display some of these numbers. I'll talk you through it, but if you have a chance to jump over to a computer, now might be the time to do that. This is a comparison between a typical mortgage quote and a no closing cost mortgage quote. Now, this first typical one, we're getting quoted 3.875. We've got our closing cost descriptions over here, which include an origination charge of 1% origination fee. It's just 1% of this loan balance. We've got lender charges of $17.75. That includes appraisal fees, underwriting fees, and processing fees. And we've got title insurance fees of about $12.68. That stuff totals up to $6,443. Now, as a comparison, on our no cost option, we're getting a quote of 4.25%. Now, for that higher rate, the trade-off is that we do not have an origination fee, and we still have our lender charges, and we have title insurance charges. Now, the other trade-off is that we also get a lender credit of $2,922.50. We do not have that on the typical mortgage quote. Now, that lender credit, a lot of lenders will keep that and just use it and just keep that as profit. We will apply that to your closing costs. You have a remaining $3,000 of closing costs. So the net closing cost you have is only $107 versus the typical quote, you've got $6,443. The difference being $6,335. Now, that $6,335 gets you a 3.875 rate. That's much better, right? But it only saves you $44 a month in payment difference. The difference between these two payments is $44.27. So that, if you do the break-even analysis, you just divide this by your $44 a month in savings. It takes you 143 months to break even, to get your investment back in the form of the lower payments that you bought. That's 1 month under 12 years. That's a really long break-even period. The spreads between, these interest rates and these credits are not always the same, but the break-even period generally goes from anywhere from as low as 3 years to as much as 12 to 15 years. So you can see that your investment of the $6,000 that you're spending, that's an expense, right? You're either rolling it into your loan balance or you're paying it out of pocket if you're buying the house. This is a refinance comparison where I'm showing you the smaller loan amount. You don't need to borrow as much because you don't need to finance this extra closing costs if you refinance. If you buy the house, you got to pay that chunk of money out of pocket. But either way, it's an expense that you incur, and it's money that you cannot get back. So looking at the period of time that it takes you to recuperate that expense being this long, obviously you can tell that doing the no-cost option is a significantly better financial option. Remember again, where I talked about the dollars that you're spending dollars here, not interest rate. And the dollar overall expenditure is really high. So think about that. This is a chart of 30-year fixed rate mortgage rates from the early 80s through, this is 2021, just when rates started going, right, the end of 2021 when rates started creeping back up. So the thing I wanted to show you is this trend line that's in a state of constant decline for 40 years. That's not accidental. That is intentional economic Fed policy.
Here's COVID. We got down to nearly 2.5. A lot of people ask, can rates go lower than 2.5? It wouldn't seem logical, but in Europe, rates are actually negative and have been for like the last 6 or 7 years. Here, in all likelihood, based on this chart, we will likely go below 2.5 at some point and possibly -2. Now, of course, the curve, there's actual curve is a little jagged, so there's times when rates pop up, and it's like if you're buying a house, you might accidentally get stuck buying a house when rates a little higher because you can't really control when you're buying a house, but you can control when you're refinancing. So when you buy the house, don't pay a bunch in closing costs. Just wait. The market will naturally take you down, and then when rates are a little lower, just refinance again with a no cost loan. Don't invest your money to get down there. Let the market naturally take you down there.
I've been doing that no cost strategy for about the last 15 years. And I have to tell you that I really rarely do that thorough analysis where we look at that 40-year history of things and then we look back and see how much savings someone could have realized during that period of time. And I'm just like kind of surprised myself about how much savings. I mean, it's literally saving people tens of thousands of dollars. Um, Most people roll in like three, four, maybe even five, six. I've seen people roll in as much as $12,000 in closing costs into their loan with discount points. Um, on average, people save maybe $150, $200 a month on mortgage refinancing. I mean, you can do the math. It's not that hard. Most people are hardly ever even recuperating the investment being those closing costs. You've invested that money, right? You've bought that rate down. Excuse me. And so they're barely recuperating, if they ever recuperate. If you refinance frequently, you're never even recuperating those costs. And so that's a major problem. This is applicable to when you're buying a house too, you know. So we can eliminate or at least minimize closing costs on an acquisition loan when you're buying a house, just the same as a refinance. So this is applicable to either scenario. And I'll just tell you, there's thousands to be saved there. So now that you've seen some incredibly useful analysis on that part, we've talked about some of the other process stuff and some of the comparisons between the types of lenders that are out there and some of the advantages and disadvantages that are out there. So now imagine what it will be like to have a go-to resource in your corner, someone that can coach you through the trickier parts of your real estate transaction and save you thousands and tens of thousands of dollars over the life of the time that you have mortgage loans. I'm sure that you have questions about this no cost thing. Maybe it sounds gimmicky to you. Maybe you're concerned about this sounds too good to be true. I'll answer all those questions for you. And rest assured, I know you've got questions. I mean, there's lots of questions that come up throughout this process. I'm happy to go through those questions for you. There's a link that's showing up right now. Click that link. It's going to pop up a page that looks like this. Pick a day and a time that works for you. We'll spend some time going through your questions, getting you pre-qualified, or just answering general questions that you have about the process of buying a house. There's a lot of stuff that comes up throughout this process, and it's good to bounce some ideas around with somebody who's willing to talk you through it. Do yourself a favor, lock yourself into using someone with nearly 30 years of experience to your advantage. Look, don't procrastinate and don't sit around and wait for your realtor to give you their recommendation. Not that there's anything bad about their recommendations necessarily. It's just that I've worked with probably 40 or 50 different loan officers in my career, and two other guys even understood what it was to put together a no-cost refinance. Rarely did they do any critical analysis on it. We'll do some really critical, thorough analysis on this. So my point is, do you want to roll the dice like 1 to 20, 1 to 25 odds on the chances that you're going to find somebody that's going to know how to put that transaction together for you? Or do you want to lock in at least a Q&A with me to uncover some of the details on what you're faced with and some of the particulars about what you want to do with your financing and with your real estate proposition? So please click the link now, pick a day and a time that works for you, lock that in. I'm really glad you watched the video. Thank you so much, and I hope to talk to you soon.